Hello and namaskar. This is 𝐤𝐞𝐤𝐥 here once again, and welcome back to my channel, 𝐦𝐤𝐥𝐚 Stock Analyst. As I had promised that on Friday, means today, I would come out with forecasting and detailed analysis of a very prominent stock. So that stock is Tesla. So why Tesla? Because it will cover the whole aspect of automobile sector, which is one of the biggest business sector in the world, and as well as the semiconductors and electric vehicles and the new technology electronics segment. And also because of the recent controversies regarding Tesla and its promoter Elon Musk, the stock had corrected more than 50-60% because of this China's sales growth less than what it was expected, and all the negative news about that Twitter, already so much of money it has been pumped into Twitter. Elon Musk had to sell its share, so his more attention will be diverted towards Twitter, and there won't be much attention or the management focus on Tesla would be there. So let's analyze this, that what is Tesla. Is it a buy or sell at current market price of $150? So by the way, Tesla, I am not going to say is it a buy or a sell. I mean, I am not talking about Tesla car so we are talking about the stock. So Musk's comments yesterday, only the 2 days before it quarterly or the yearly results, which you know as the December quarter results, came, and car deliveries for 2022 were up or grew by 40% to 1.31 million car sales, and the management of the Musk guidance was that it would grow by 37% for this year 2023 to around 1.8 million cars. So even though all the expectations, when we talk about expectations, which I had told in the last video also about the market news analysis, that expectations are very relative. I can have some expectations, but you have to see that how that company is growing or not growing. I mean, that is one absolute way one has to look into. And the valuations, it's because valuation is the king, and the management is also very important in business, so BVM. So, but valuation is very important, and you have to say that is the most important for my perspective. Musk comments at a conference call after the results suggested that deliveries for production will be 1.8 million cars. So this would represent a growth of 37% from the 2022. While the production of its pickup truck is expected to start this year, but we will not see that volumes coming from that pickup truck until the next year, means from 2024. So typically we should look at earnings growth and correlate it to PE in a very simplistic way of understanding of valuation aspect. As I always tell that I will share this magic mantra, or what you call it, which I have understood from my experience and learning, and I will share it with you, which is not given in any of the books. What is the valuation? So one positive thing about, so what are the positive things which we have to say that investment rationale if we want to look at this company? So one first thing which we look at this is that it is a unique position in the world in EV car segment, because no other company even comes near to it in terms of technology and scale and branding. Just imagine, it sells around say 1.3, and now the target is 1.8 million cars it produces. Look at India's total car production, not EV. We are talking about the total auto car, passenger cars production. It's around 3.1 million. Means approximately 60% of India's total car production is produced by this one company, Tesla. So, and that too in a unique technology space, which is EV. And the best part is that it has perfected the art of this electric vehicles. All others are still fudging around and trying around and trial of these things, but none has come to that particular point of perfection as Tesla has able to manage. As far as the batteries is concerned, as far as the performance is concerned, as far as the all the other aspects of a normal automotive, what do you call engine, IC, internal combustion engine driven car. So that kind of a performance nobody has come. So we have to give that much, what do you call that, valuation premium also. Then it's an undisputed leader. So imagine that any other company, even with all the trials and all the R&D and everything, it would take at least next 5 years to reach to the even near to the second position of Tesla. So that gives minimum time of 5 years for the Tesla. Minimum. This is, I'm not so saying it can even more. It's a long term, right? 5 years of undisputed leadership and the long-term growth guaranteed. So this is the long-term growth that we can, this is that on an average, even if you say that, okay, it is not growing by 50%, but on an average for next 5 years, you still can assume very easily that it can grow by an average 35% per year, every year. So CAGR, you can say that 35%, it's tremendous. Now, the second positive aspect of which we can look into this stock is it's one of the main client or the car sales market is China, and also one of the biggest production facility is in China. So it has suffered because of the China's COVID situation in last 4 months, and the China was kind of closed and nothing was still open. But now with the new year and everything, the China has opened up officially and allowing traveling, and COVID situation is also, if you look at the COVID situation, it is kind of stabilized. So far 2023 that we can see that additional growth and production boost coming back to Tesla from China. So this can be one additional trigger. And mind well, I mean, this first quarter, as we all told, that because of the holidays in China and Lunar and COVID and everything, it's washed out. But we can have a very much surprise also coming into, say, second and summer season from some positive surprise. So it can even grow above 35% or 37% of the guidance. So according to that, you have to see. But minimum what I see is that it cannot go below 35%. So that is one aspect you please hold. Why I am telling you to remember this 35% growth? Because I will be concluding, when I will be concluding that how to connect this earnings growth with the valuation. So the third is trigger, positive aspect is Tesla's Indonesia manufacturing plans expected to realize in this year. And it would be the biggest boost for the future of Tesla, as it would get access to one of the largest nickel mines resources, which is the main raw material for its battery. So its main driver or the main cost of its EV cars, electric vehicle, is battery in nickel. So imagine Indonesia is one of the largest nickel mining resources, and getting if you establish a factory and the plant there, so you directly so much of savings if you have direct access to this, savings in the logistics, savings in the cost of procurement, buying, and that savings of cost we can see over a next 3-4 years coming into the Tesla's bottom line. And even if suppose the Tesla has, what it has done, it has reduced its prices, average prices of cars by 20% to make it more competitive, and because of the kind of a tepid economic scenario all over the world, so it can manage to even keep the prices even less and still maintain the margins, or even boost the margins with, if the prices is remaining at the same level without reduction, it can even add to the margins because of this nickel having captive resources or having access to the nickel at its mine, head it had. So it will boost margin, it will cost reduction, and this will, be the another driver of the EPS. So let me share with you. And fourth and the last, the one thing, positive aspect which we can look at now from the point of view of the stock in Tesla is it has sold its 75% of its Bitcoin and cryptocurrency holding. As such, and it has already taken the whatever the decline in the prices as an impairment charges into his financials, so into his income statement in the last quarter, not in this quarter results. It has not done any taken that. It has not sold anything, so it has not taken any impairment charges. But as you understand also that volatility in earnings due to this volatility in the Bitcoin and cryptocurrency coins, it will come down because the volatility, it has already sold 75% of this. So that volatility which was hitting its bottom line also, which will be much reduced because it's hardly now 25% it is holding. So that is also another positive aspect which one can look into. Now let me share my magic mantra for valuation, which as I told that nobody would tell, or neither it would be mentioned in any book, because it comes from my experience and looking at the historical data and vast number of companies, financials and history, and going through this so many balance sheets and so many historical financial metrics of so many companies. So I would simplify it for you so that you can always use this for generally any company. Although one disclaimer is that this valuation parameters which I am talking about should not be used for generally for commodity and cyclical companies, cyclical stocks like commodities, because that is a different aspect. There is a lot of volatility and there is a cycle, so you don't have to look at its earnings growth and connect it. There is a different way which we will discuss in some other videos later. But generally it holds true for all the sectors other than the commodities and the cyclical metal sector. So you should use the average earnings growth of the company as its P discounting multiples. P multiple should be average earnings growth. So if a company is growing by say 20%, then generally we can value that company at 20 times. So P, we can take it as a 20 multiplied by the 1 year forward EPS, and you can even 1 year forward EPS also is, because not everybody is going into deep into an full time doing research and analysis and come to the exact decimal point of earnings, because any case it is all estimates. So your estimates or my estimates and management estimates, because final earnings after the results come out only people know, right? So better whatever the latest results is there, and looking at whatever the guidance or the management talks about, and looking at that particular economic cycle of that particular country or the world, and in the business segment which is looking at the competitors and its own competitive values, you can simplistically annualize that quarterly earnings. Annualize in the sense is, suppose it comes at say $1.9 for this quarter, its earning came because if you look at this Q4 revenue, Q4 2024 December ending revenue quarter, $24.32 billion, and EPS came to $1.19. So now if you annualize this EPS, so 1.19 multiplied by 4, this 4 quarters. So that is the way, and it's very simplistic. I am not telling that this is the best or the best way, but for a normal layman investor, this is the best way to look at it. And you will not go much wrong about even this with this. So rather than spending so much of time on trying to understand and make the full this thing, I am just giving you, because for any normal investor, how he should look at it. Just look at like this way, annualize it. So it comes to $4.76, $1.19 multiplied by 4 because 4 quarters. So annualized for the next year it will be say $4.76. Now as we have told that we have taken this average growth rate was say around 37% on the last 3-4 years, and looking forward also it looks like it has given a guidance of 37% for this year. So take this 37% as a 37% as 37 PE multiple. So multiplied by that 37 multiplied by 4.76. So we get the target price of 176. So on an average, if the technology companies, suppose why they get higher earnings, its higher multiples is, as I told you, it should be related to your earnings growth. So if a company is growing by 40% earnings growth, we are talking about earnings growth, EPS, or the profit growth, not revenue growth, not top line growth. So if earnings growth is say 40%, so you can take the target price or the value of the company roughly, approximately 40 multiplied by 1 year forward earnings I am talking about. Okay, so the latest quarterly results and try to just multiply it by 4. So what you get, that forward earnings, 1 year forward earnings, and that multiplied by the PE multiple, which is equal to your earnings growth. So some companies earnings growing by 40%, so 40 multiplied by its forward 1 year forward earnings, that is your target price roughly you get. If it is growing by say 25%, because many times companies, this is the best way of simplistic way of analyzing and coming out with the target price, that whether there is a potential of upside is there or not, or at least downside is limited from this. So if you look at this aspect, you can say that there is even though right now, as of now already, because yesterday the stock Tesla went up by 10%, but still there is an opportunity in this stock, because this is just a rough upside we are talking about. If it surprises is any quarter with some positive more than 40%, stock can, because it's all psychological. Stock and valuation is psychological. There is nothing fixed like formula. So if it's 40%, it can go to even, then that time people will take it like say 40% and multiply it for the next forward earnings, and that way stock can go even up to say $200. But the best aspect, or what it gives, is that what can go wrong. So this way you can see that, okay, what is the bottom or the downside of this stock. So downside comes to say 160, so 150, I mean 144. It doesn't have much downside from this particular point of price. So this is what I wanted to share it with you, this Tesla, that yes, one can go ahead and buy, but at least not to sell into the panic, whatever is that. You can see the future of this EV and looking at the Tesla's unique technology, and whatever can say that in Twitter that it has to sell, but it is, keep in mind, Tesla is Musk's baby, and he also knows, he's a very smart guy. He knows it very well, even though he looks like technologist, but he is more a financial enlightened guy. He's a much more financial smarter than most of the analysts and all these people, including, of course. So this way he will always be focused, and it is his bread and butter, this company, and from this company only all his other ventures can get funded. So his full focus will be on this, and he will try to push it and maximize everything. So on that aspect, one need not worry that management will be distracted from this Tesla. This is what I wanted to share with you. Before I end, I just have a request that if you like my channel, you please subscribe. If you have not yet subscribed, and please push the notification button, so that as and when I come out with the videos, you get notification of it. And also, if you like this video, you please like and share it, and visit my website www.salesanalyst.com for knowing about any services or any articles and blogs which I come out and write and publish it on my site. And see you once again next week with some more ideas and updates. Till that time, ciao, love you all.